Trump is not McKinley, as he likes to think of. Maybe he's Nixon. Maybe he's that iconoclastic and wants to break the mold. He wants to get on well. It's not the rapprochement with China. It's the rapprochement with Russia. It's not ending gold, taking America off gold. It's putting America back on some form of loose gold standard. And these are things which I think we've got to be thinking about. It may never happen, but all I'm saying is we seem to be moving down that road. And ultimately, what you've got to get out of this debt problem is huge monetization, and repegging in some form to gold or bringing gold into the world monetary system is a wonderful way of doing that. Gold is a different question, and I think the dollar is going to lose out against gold. That's for sure. Gold could be moving significantly higher.
Investors speculate whether Donald Trump might adopt unconventional measures to address the rapidly growing U.S. debt, especially after he ruled out cuts to popular health and retirement programs. With U.S. debt now at $36 trillion, over 120% of GDP, and rising due to persistent budget deficits exceeding 6% of GDP, Treasury Secretary Scott Bessent has aimed to halve the shortfall. This situation contrasts sharply with earlier periods, such as World War II, when government debt was 40% backed by gold reserves. It remained below today's figures despite wartime financing triggering a nearly 150% expansion in the money supply and pushing the debt-to-GDP ratio to record levels. While Bessent has downplayed speculation about a potential gold revaluation, stating it's not what he had in mind, the fact that the idea is being discussed underscores gold's enduring role as both a financial asset and a geopolitical tool. Michael Howel, known as the king of liquidity and founder of Cross-Border Capital, argues that solving the global debt crisis will require large-scale monetization. He believes reintegrating gold into the monetary system could help stabilize debt markets and restore confidence in fiat currencies. While not inevitable, Howell sees the world moving in this direction. As one of the world's major economic powers, China is also seeking a gold revaluation. Much of China's debt is backed by tangible assets, meaning the most effective way to rebalance the system is by reducing the value of paper money, achieved through a higher gold price in yuan terms. Howell also examines the potential impact on the U.S. If the yuan to dollar exchange rate remains around 7.2 while gold appreciates, this would translate to a U.S. dollar gold price of approximately $3,600 per ounce. As we dive into the video, remember to subscribe and tap the bell icon so you never miss an update. We value your thoughts, so drop a comment below and give us a thumbs up if you enjoyed the content.
That's not necessary. What you need to do is to devalue the Chinese yuan against real assets like gold, because effectively you need to get, if those debts are held against ultimately real assets, which it must be, you've got to get the value of paper money down. And what that means is getting the Chinese gold price up. Now, we did estimates which suggested that the Chinese needed to expand liquidity by about 30% to get an equilibrium back between debt and liquidity. And one of the themes of our research consistently is that forget debt GDP, that ratio is a completely nebulous and meaningless statistic. Economists come up with it because they can, because it's an easy thing, an easy ratio to calculate, but it really means nothing. What you've got to do is to think about the practicalities of what needs to happen to debt. Debt needs to be refinanced periodically, which is why you need liquidity. So you should be looking at the debt liquidity ratio, not the debt GDP ratio. And if you look at the debt liquidity ratio, China is about 30% short of liquidity, and it needs to get more liquidity into the system. So think of this as a devaluation of the Chinese yuan by 30%. That would how the maths would ultimately turn out. If you devalue the Chinese yuan against gold, what you're then talking about is a yuan gold price of about 26,000 yuan per ounce. Okay, we're currently just about 20, but the yuan gold price is going up the whole time, and that is taking the pressure off Chinese debtors consistently. What would that mean for the US? Well, if the US kept the yuan gold price, so the yuan US dollar price constant around 7.2, that would mean a US dollar gold price of around 3,500, in fact, $3,600 an ounce. Now, that would be an interesting proposition. So if the US allowed the gold price to revalue, they'd get a whole lot of win-win situations. Number one, they could do a deal with China, and there may be some quid pro quo in that. Secondly, they could reset the international monetary system, and it could take on a new aspect of gold, which I think fits in very much with the philosophy of Scott Bessent. And I think number three is that the US Treasury would get a windfall gain through the Treasury General Account, which would mean that they would have to issue something like $1.25 trillion less of debt over the next few years. And that would be significant. So, Trump is iconoclastic. He likes to break the mold. I mean, in many ways, you could think he's like, in actual fact, this thought occurred to me. I was listening to another podcast called These Times, where it was comparing the current situation with the early 1970s. And it was saying that if you looked at Congress in the early 1970s, congressmen were trying to pass bills that were criticizing the Europeans for having both a trade surplus with America and operating under the US defense umbrella. Well, hang on, deja vu. This is exactly where we are now. That's what they're saying. But that was the era of Nixon. So, maybe Trump is not McKinley, as he likes to think of. Maybe he's Nixon. Maybe he's that iconoclastic and wants to break the mold. He wants to get on well. It's not the rapprochement with China. It's the rapprochement with Russia. It's not ending gold, taking America off gold. It's putting America back on some form of loose gold standard. And these are things which I think we've got to be thinking about. It may never happen, but all I'm saying is we seem to be moving down that road. And ultimately, what you've got to get out of this debt problem is huge monetization and repegging in some form to gold or bringing gold into the world monetary system is a wonderful way of doing that.
Gold has been on a tear, surging 45% since 2024. Since November 2024, an unidentified buyer in the U.S. has reportedly purchased 2,000 metric tons, equivalent to 64 million ounces. This staggering amount represents nearly 25% of the massive gold reserves the U.S. government is said to hold. Following Trump's victory in November, gold began flowing out of London and into the U.S. The sheer scale of these purchases raised concerns about whether the London Bullion Market Association, LBMA, could fulfill its delivery obligations. So far, this major U.S. buyer has taken delivery of nearly 30 million ounces, over 10% of America's reported gold reserves. Meanwhile, central banks worldwide have been quietly accumulating gold for years, with China leading the way, stockpiling in preparation for an evolving financial landscape. Michael Howel has also noted the increasing demand for physical gold from the COMEX futures market. He finds it intriguing that more investors are choosing delivery over paper contracts, possibly due to rising geopolitical risks such as trade tensions. Additionally, he speculates that gold may steadily shift from west to east, further tightening global supply. Now, let's redirect our attention to a video.
An expert on the mechanics of the gold market, but I'm certainly familiar with the idea that there is a cartel and the gold price is fixed. I think that I'd make two observations. One is the longer term fact that if you look at gold, how gold has performed, gold has pretty much matched in terms of price appreciation, the increase in US debt. So if you look at US debt, the outstanding stock since year 2000, today compared with year 2000, the US debt stock, I think I'm correct in saying, is about 9.5 or 9.6 times bigger. So a huge, eye-watering, jump. How much has the gold price gone up since that time? Answer, curiously, 9.6 times. So it looks as if gold is moving exactly in line with debt. That's for sure. So if debt continues to go up, which, spoiler alert, it will, then you're going to see a much higher gold price. And that's, I think, the thing for everyone to remember. That's why you need gold in your portfolios, because the world has changed. Debt accumulation by governments is definitely on the cards. On top of that, you've got accumulation of gold bullion by central banks, certainly outside of the West. And we know that China, Russia, et al. Are buying lots of gold at any opportunity, and that's a significant factor. So you've also got the supply factor coming in. The third thing that I'd say, and this is what I don't really know, but I'm curious and scratching my head about this, is that if you look at the COMEX futures market, there is a lot more physical delivery coming out of that futures market. Curiously, as to why that is. Now, it may be that that's because investors in COMEX are scared by the tariff threat, and therefore they want physical gold delivery in New York as soon as they can. That's possible, but there's a lot of other motives or a lot of other reasons why that could be, and it could be that gold is disappearing, from west to east, and there's accumulation, and this is a good way of getting it. Now, somebody said to me that if you look at the silver market is also doing the same thing. And what's happening is that silver is taking up to 9 months to be delivered in terms of those gold futures contracts. And that's a phenomenal long amount of time. And then you've got the Bank of England, which has overseen the London gold market. And the Bank of England is trying to deliver gold bullion into New York, and they can't do it. They say it's a 6-week delay. And the excuse they come up with, which is absolutely mind-bending, is that they can't physically transport gold bullion from the vaults in the Bank of England to Heathrow Airport because of traffic problems in London.
Since 2000, U.S. debt has surged approximately 9.6 times, mirroring gold's price appreciation over the same period. Recognizing this correlation, China has aggressively accumulated gold, possibly preparing for a revaluation to alleviate its debt burdens. As central banks worldwide continue to increase their gold reserves, this trend suggests a significant transformation in the global monetary system, underscoring gold's role as a crucial hedge against rising debt and economic instability. If U.S. debt continues rising, how high do you think gold prices could go? Share your feedback in the comments below. If you found this helpful video, hit the thumbs up and subscribe to keep up with our latest updates. We appreciate you being a part of this journey.